Hello, everybody. Frank Gray here with the National Real Estate Post, here with our good friend Barry Habib. Before we get started, Barry, just want to remind everybody that Movement Mortgage is amazing. The cool thing about them is if you're a loan officer with them, your files go directly into underwriting. Doesn't even go into processing, go straight to underwriting. You've got an approval guarantee of 6 hours, right? After that, once it hits
Six,
processing, 7 days.
7 days.
And then
Yeah.
a 1 day close. If you're thinking about making a move, if something's going on, you're thinking about looking to work somewhere else and you're a loan originator, you might want to check these guys out. Click the banner you see on your screen here over on your right, or there's a link up above if you're on Facebook. Barry, let's have a
By the
conversation.
way, great people there too. Really great people.
Oh, dude, they're rad. We dig Movement, man. We're so happy that they're our retail mortgage sponsor. We just can't get enough of them. So let's have a candid conversation this morning, shall we?
Let's.
Let's. And it's a little different show this morning,
It's like
guys.
it's like it's like in the it's then like in One Flew Over the Cuckoo's Nest when Jack Nicholson's there. He says, "Can we speak?" Yeah, let's.
Let's. Exactly.
Yeah.
So you and I were talking recently, and you're like, man, some weird stuff going on out there right now in lending, and it's got you a little concerned.
Well,
And
both.
I think it's good to talk about. Let's have it. What's on your mind?
So a little bit of a different discussion. Look, I mean, as for years, you and I have been talking about the real estate market, and while the media thinks the real estate market is, the worst place to be, and I see stuff coming every day from Diana Olick and her henchmen. Don't buy a house. You're nuts if you buy a house. There was one that came out yesterday. Only buy a house if you have $20 million. I
Yeah.
mean, like, come on. And meanwhile, all the housing markets then is do well. I think for all the reasons that we've talked about in the past, lack of supply, really strong demand, strong future demand, a lot of other things, I think that the housing market will do fine. But what I'm seeing is a change. It's been happening gradually in underwriting.
Okay.
And, as we've discussed, a lot of lenders removing overlays. And look, who could blame them? Which customer wouldn't want that, right, to qualify? They want to get in the house. Which loan originator wouldn't want that?
Sure. Makes it easier to get deals.
It's great. But, when you start looking at this, it's kind of has a little bit of reminiscence to where we were not too long ago. And some people think the housing bubble started in 2006. Yeah, but the seeds were planted in 2001, 2002, 2003 when underwriting guidelines got really loose.
Right.
When we start to, and Frank, you said, the reason why they want to do this is because the refinances are down by half. They want to try and
Right.
make up for
They
volume.
need volume. They need to increase. So what are they going to do? They're going to loosen up. So they're going to start taking away some overlays, right?
But and of course I understand it. Look, I'm a salesperson, okay? So I understand this. I get it. I'm just saying, just take a step back a minute. And here's the question that you and I kind of asked each other: a 580 FICO with a 53 back ratio on a 96 or 97 LTV, would we be eager to lend money, our own money, on that transaction?
No, I
You
don't
have to
think
think about
so.
it. Yeah.
Yeah. So I'm just curious for the viewers out there. Maybe they can put in the comments down below if this is the trend that they're actually seeing. If they're seeing that in their own company or amongst their, like you brought up, amongst the competitors.
Yes.
Because
Well,
if the competitors do it, then what?
then other companies have to try and follow suit because it's. I'm not saying this is an easy discussion or decision. This is so hard because we want people to get mortgages. We want to increase volume. I get it. All I'm saying is this: is that right now you've got something going on, which is what I call the magic elixir. And just like we've said, how strong the housing market is, that appreciation, it fixes everything. It
Yeah.
masks everything. You could have weaker underwriting guidelines, and because of appreciation, if someone gets in trouble on the payment, now they've got equity, they've built equity, they can certainly find a way to either beg, borrow, steal to make the payment because they're incented to do so, or in this hot market, they could sell the home and preserve their equity. If appreciation were to stop, and I'm not saying this happens soon, if it were to stop or, heaven forbid, have a bad year and go down, these weaknesses become exposed
Right.
and you start to this is exactly what happened. It's exactly what happened.
And we can see that, things are lining up to where we could see prices cool off a little. I mean, rates are going up, right? Amongst some other variables. where, let's say inventory starts to come back into the market, rates are a little bit higher now, all of a sudden we could see appreciation start to cool off, which could, like you said, be the start of something like this.
So, in my humble opinion, I think the real estate market stays strong. I really like the demographics. I don't think that supply comes back that easily because I don't feel builders can ramp up production due to labor shortages and supplies being more expensive. Heck, they're talking about lumber tariffs now, as well as regulation. And the most important factor is that banks got burned when they just lent on spec. We're not seeing that anymore. So I feel that the demographics would indicate that the amount of first-time homebuyers coming into the market for the next 8 years is going to continue to accelerate. And I don't think builders can keep up. So it's my humble opinion the real estate market stays strong, and this is probably okay. But the thing of it is I could certainly be wrong. And we could have an event that hits us that is something that's an unforeseen event, a black swan, something we don't see coming. And the housing market responds adversely to it. And then if we've done a lot of loans with extraordinarily loose underwriting, does it present a problem? And I'm just having the conversation with you.
I know it's just a conversation. Yeah, okay, builders might not be able to keep up, but like you said, there might be a scenario that pops up where the resale market takes off. You know what I mean? Where it's like all of a sudden people decide they want to sell their homes, and there's a lot of them that come on the market, and then the same situation will take place. So.
Or worse yet, Frank, God forbid something bad happens, something, a bad event, where, look, I got to tell you, I was in D.C. in 2002 on a speaking deal, and I really kind of was there for a couple of days, and they had these two guys as snipers, and what an awful situation. It shut down the town. Businesses were kind of really struggling. And could you imagine if something bad were to happen, something like that, God forbid,
right.
Things can change, is what I'm saying.
Right.
Confidence is fragile. The economy may be a bit more fragile than people think. And while I'd like to think we'd be correct in the real estate market doing well, I'm just wondering what if we're wrong? What if I'm wrong? And if we get too loose with underwriting, does it come back to bite us? And then what do the regulators do to us for another bout? You know what I'm saying?
Yeah, exactly. Well, these are good questions, and this has been an interesting conversation. And I know the show today is a little different, but I think what we're reaching for here today or looking at is really the feedback from the viewers, to see what are you seeing out there, and what are your thoughts on this and what Barry's observing here. And
the answers. I don't have the answer. We don't have the answers, and we're not saying it's wrong, and we're not saying it's right. All we're saying is this is a trend that we see
developing.
It's developing. And look, Frank, you and I are old dogs, right?
Yeah.
This feels a lot like 2001 when the reins really started to get looser. And those weaknesses weren't exposed because the appreciation in the housing market fixed everything until it stopped.
Right.
And then when you expose the weaknesses, we know what happened. And I'm not saying we get there. I'm not,
Right. You're just observing something and saying this is something to consider, something to look at, and something to be aware of is basically all we're saying today.
Yes, that's it. I'm curious to see what people say.
Me too.
Because your observations probably could be more astute than what we're coming up with here. And you guys could actually help us kind of see if we're on the right track here, if we should be concerned, if we shouldn't be concerned. And I'd really be curious to get your comments and listen, those that are viewing this.
Yeah, me too. So, well, that's enough then said.
By the way, Frank, rates, let's be careful. It's jobs week, okay?
Okay.
So this is going to move rates. Rates, on a technical level, we watch these technical. We're right on this precipice where we can make a big move in either direction. So This is a time to be on guard, okay? Let's watch the jobs numbers. You're going to get a lot of stuff. Housing numbers, PCE, that's the Fed's favored gauge of inflation, and the big job reports on Wednesday and Friday. This is going to be a volatile week ahead, so it'll be exciting. But I want you as a viewer to prepare your customer to be on guard. I'm not saying go ahead and rush and lock everything. I'm just saying be prepared to, or be nimble enough so that if rates do drop because the news comes out bond friendly, you could take advantage of that.
Okay.
Look, I still really love the housing market. I travel all over, you speak to people. It's really, really strong, and it's going to continue to be strong unless we get surprised.
Yeah. So with that, the best way to keep track of what does happen with rates and what will happen this week, and keep your finger on the pulse of everything, is please give MBS Highway a try. We've got a link down below. They give you a free trial for a couple of weeks. You'll know every day throughout the day what's going on to better serve your customers. So.
Thank you, and
bet.
thanks, guys. You guys are always so kind. I mean, the comments that you put down there are always so great.
Well, you're an okay guy, so
appreciate you guys.
Figure throw you a couple of nice comment bones here and there.
Thanks.
So, right on, brother. Thanks for being on the show. I appreciate it.
Man. You bet. Hope everybody has a great week.
Okay, you guys too. And just again, your comments down below on today's show are really appreciated. So, all right, with that, we'll see you later. Catch you later, Barry.
All right, thanks, man. Bye-bye.
Bye, guys.